So in this recap video, we're going to cover the current trade that's still open, by the way, in the Russell. So members and non-members alike, this is how we're managing one of two good weakness stories that I like, tech and small cap. And this is obviously the small cap story. So first of all, the first question anybody should have for any entry is, where is the point of validity? You know, where is the trade no longer valid? Where is the selling pressure anticipated to come in, keeping the downtrend intact? That is your stop loss. In this case, something up around 1605. Okay. Then we have the short, which has varying degrees of risk associated with this, rather wide zone. The lower half, you can generally say, is going to be a more aggressive, higher risk, lower reward as compared to the upper half. So that's another thing to think about when you're putting on these shorts. And, we were focusing on the RTY, which could also be traded via the IWM ETF. This is the short alert that went out. So basically looking at 1571.5 to 1578. Right now, we went all the way up, as y'all can see here, to 1589, but that was still within the allowable wiggle in this short zone. Again, one size does not fit all for entries. We want to think about what each layer of resistance means to the risk-reward ratio. So the more low risk you are, the less you need more and more and more strength to get up into this area. Okay? Keep that in mind. You need more strength, more of a bounce to get here. So the realistic part of this is you could miss the trade altogether. But if you cut this in half, basically give yourself two sections, if you want to be conservative, this is going to be it. If you want to be aggressive, this is going to be it. And if you want the absolute least risk, you short right up against what we call validity. In this case, that would be about 1595, which you'll notice never got touched. That's the risk in being very conservative. You might miss the trade, but if you couldn't afford a zone in terms of risk that was any lower than this, you can't take the trade. And in reality, you didn't miss anything then, because it really wasn't your pitch and there was no reason to take a swing at it. So that's where, when I look at this particular move here on the daily, now I know the daily isn't for everybody because the risk that it does entail. So that's what I'll also say. Once we feel that we're looking at a weak market, look at the 1, 3, 5 minute time frames. Think about shorter term time frames and what those could mean to an alternative trade. Maybe it's a wave reversal. Maybe it's a 5 minute trend follow. Okay, maybe you're looking at the 1 minute volume weighted average price here on the let me bring this in here. Where is it? Yeah, maybe you're looking at the 1 minute and the volume weighted average price. Okay, now every one of these tools that I'm showing you, gang, volume weighted average price, Darvis, propulsion, these are all free tools, gang. These are all free tools. And I just want to remind everybody, again, part of that volume weighted average price is to use another tool that we love, which is the auto chartist. So again, that one's not free, but there is a free 2-week trial. And then it's $12 a month after that. And a lot of you are noticing for the intraday trades, we are really focusing on that volume weighted average price plus expected price movement range. So if you're thinking to yourself, well, Rog, the short looks great, but I don't want to tolerate that daily time frame movement, that's where I'll tell you, shorten the time frame. Play smaller bounces on a 1, 3, 5 minute chart. Play the overbought volume weighted average price zone, up along here, right? You could do that as well. So there's going to be alternatives, and the alternatives are predicated by what? Oftentimes by the thing they should be predicated by. What is your risk tolerance? What can you afford to take? All right. So again, something to think about in terms of Again, not only the daily time frame trade that we took and where the validity is and where your risk tolerance is within all of that, and whether or not that kind of trade is something that's ideal for you, or you shorten the time frame and look for an intraday short setup. And that's always going to give you something to fit your risk management tolerance, fit your risk, and rather than the market imposing on you, because you have the ultimate strength, decision-making power here. The strength in being a retail trader is what? We decide when we want to get in, when we want to get out. We don't have to be fully invested and all that other nonsense. If we decide that a trade is ideal for our risk tolerance, we take it. And if it's not, we don't. And if you stick with that, you're going to be just fine.